Hi, I'm Dominic Picarda. It's Wednesday the 3rd of August and things have just got really ugly in the stock market. Yesterday, the correction that we've had over the last few weeks finally turned into a full-blooded downtrend, at least in terms of the Dow theory. We got a Dow theory sell signal yesterday. That was by the Dow indices and by the S&P crashing through their previous correction lows. And what does this mean for the outlook? Well, around 3/4 of the time, history tells us, according to the authorities on the Dow theory, that we get a bear market around 3/4 of the time. So is that what's going to happen this time round? Well, in my opinion, left to its own devices, the stock market would now go into a bear market. It's very easy to see why, in my opinion. The US stock market is something like 50% overvalued, maybe more like 75% overvalued at current levels. We are in a long-term bear market. The bear market, which began in the year 2000, and I believe will run maybe until the late years of the current decade. We're in a long-term bear market. The natural tendency of the market in this time is down. We now have the clear signs of a slowing economy. The cycles in the stock market are now down. And in my opinion, the only thing that is going to prevent a full-blooded bear market from occurring now is if we get more quantitative easing. If Ben Bernanke comes out and, like he did last summer, and hints that we are going to get another massive slug of bond buying by the Fed, money that can then come and keep this show on the road for a little bit longer. There is no doubt in my mind that had it not been for QE1 and QE2, the current bear market or the current bull market would have been much shorter than it has been. It would have traveled much less distance. It would have been over by now. It could have been over last summer. I think it or fading out a little bit later than that. So it's now all about the timing. I think it's very clear that there will be more QE3, or there will be further QE3, and I've said this all along. I think, though, the uncertain thing is the timing, and that is going to, and what sort of damage we could get in between now and the time when Bernanke tells us that he's going to crank up the printing presses again. So we now face a hairy time ahead. My bias now obviously becomes to looking for short positions, and that's going to be my bias until either we get a clear signal about more QE, or the Dow theory signal that we've got gets reversed. I'm going to go into the Dow theory signal in a further video later today, and also in my main column this week. And in the meantime, I'm going to start assessing the levels where I'd like to start getting short of these markets. So good luck with your trading, and I'll catch you later.